Okay, good morning, folks. Welcome back. All right, so we're looking at an economic calendar this morning. We have some pretty eventful things going on in about 12 minutes or so. So the 8:30 news embargo will be lifting, and then we'll have CAD trade balance and building permits. Then we have dollar unemployment claims and trade balance. Later on this morning, 10 o'clock, we have ISM and FOMC speaker Powell. And at 11 o'clock, we have crude oil inventories. So it's a landmine field out there. It's lots of stuff. And then we have non-farm payroll tomorrow. So very, very tricky week, which is the reason why I outlined the levels I want. If I don't get those levels, I don't trade. So as we'll see here, hang on one second. Let's go over to our charts. Oh, good grief, man. Change over. There you go. All right, so we'll be looking at CAD in a couple minutes. Let's go real quickly to the dollar. All right, so the dollar index has had yesterday's New York session only shows the Forex calendar for the recording. Is anyone else having problems looking at yesterday's New York session? The recording? Yeah, it's just you, Thomas. I'm not sure what's up with that. Might be your video player. All right, so let me get this out of the way. So I was looking for a little bit higher price. I wanted to close on this candle. They actually respected the wicks in here so far, and we've rejected that. So we're reaching for a little bit of no man's land in here. I mean, yes, we have a reactionary point with this low, but given the news this morning and non-farm payroll coming up, I don't trust it. I'd rather have this level here and be confident about what I'm looking for. So while, yes, we're seeing some turn in here, it's still early in the day. Euro pound, I've been drawing your attention to this liquidity void in here. I still think that's going to be a draw on price. So that leads one to believe either cable's going to slip hard or euro's going to rally hard. So we have to look for either one of those scenarios in price action. So euro bouncing off the 50% level of our range in here we outlined. A nice little reaction so far. Come up, close the void essentially in here. Let me get this out of the way. Good grief, this thing is always in my way. It's a little menu box that allows me to control GoToWebinar's features, and it's always in the wrong spot. All right, so we see it's the low on this candle here. 114 big figure, and we just nailed it in here. So we could be seeing some reaction. If it stays in this area, we could see some movement lower off of the news. Not calling a high, I'm just looking for reactions this morning. And real quick, we'll look at the pound. Pound, I want to say something about this that I didn't mention yesterday. But we have this high back here with some sell stops below the lows. This run down, yes, it closed the void we looked for, but we've taken out stops here and here. So yeah, we have a breaker we outlined here, but this is also a breaker. And admittedly, I was so ingrained about talking about the two scenarios here, I completely ignored what's going on over here. So while I still mentioned what it was that was going to be problematic for the cable to rally, I said you'd have to get back above 29.70. The reason why I was saying 29.70, I didn't say the background behind it. It was the fact that we have this breaker here, and we're inside of that range, so it has to get back above 2970 convincingly. It can't just do this like intraday. It spiked through it, and now we're back in the middle of the range between the breaker, low and high. So we're right in the middle of it. So that's why I was demanding price gets to 2862. We could look for a potential buy there, but really the sweet spot, in my opinion, is if it can find a discount to this level down here, that isn't, it's like, that's strong. It's like really, really strong for a buy. But it may not get down there. So we have to really worry about the 2865, 2860 level. But the reason why I was saying that it was going to struggle, or not struggle, but it needs to get through 2970, or it will struggle to go up, is because of the breaker that's here. Okay, it was the last up candle they sold into, the drive for the sell stops below here, and then ultimately this lower low here has its own individual breaker. But we've already mapped out this. I'm not going to talk about that. But this 129.70, I got a question in an email. You know, what's the significance with that level? It's a breaker, and I was my failure not to go into great detail about it because either I got distracted or whatever. But the long short is that's why 29.70 is a factor. It has to get through that to escape the effects of this institutional overflow reference point as a bearish breaker. I'm sorry, a bullish breaker. It has to go away from it because we've taken the sell stops out from this high, moved lower. So if it goes above it, then yes, they are mitigating all the orders that they have used to sell short. Now, it spent a great deal of time down below here, so naturally we wouldn't expect it to be done in one day, which is the reason why I'm sitting on my hands waiting. I'm okay with it. If it trades above 29.70, I'd rather see it do it convincingly because I still have range to get for 30.65, 30.80, maybe even 31 big figure or plus. So let's go over to our dollar CAD. We're going to watch this one this morning. I got a question from Tina. Do I only trade bond trades outside the opening range, 8 to 9 a.m., and never inside? I've been known to trade bonds right at the opening price, and then other instances where I actually use the opening range. So I'm not limited to that. There's going to be times where you just buy the open or sell the opening and don't even worry about it. But you'll get all that stuff in your PDFs. So let's take a quick look at what we have for dollar CAD. It looks as if we may get some continuation on the lower end. We have sell stops below here. Let me outline that. And again, I am not advocating taking any trades this week because of where we're at on the calendar, where we're at with the fact that we have so many news events and going into non-farm payroll. So we have a shortened week because of the U.S. holiday. It's just better to sit on your hands. And I know some of you are going to go, oh, man, I don't want to hear that. Well, man, it is what it is. Now we have 2 points of reference in here. We have this down close candle had the most dynamic price action to move away from it. So this could be a breaker, which we're seeing already initial impact from. It rallied right up to the high. See the high on this candle, 29.45, and where we're at so far for this is 29.43. So we're inside the range of this breaker. Bullish order block that took price higher to run stops, and we have this larger one in here. So we do have sell side liquidity resting just below that. That's a wimpy looking accident, isn't it? Okay, so we have a fair value gap that we could see a spike up into and disregard that breaker. Here we are, getting ready to have the news. And that low comes in at 29.56. So we'll look at 29.55. See if we get a reaction there to go lower. And of course, now everything else is going to be huge. Okay, so we're looking for a potential move up. If we run into that, that'll be another bullish order block that could act as a breaker as well. We had nice price movement away from that level, so it's kind of layered. So 29.55, 29.50, if it spikes up to that level here, that could be an area where we could see selling and then make a run for the sell stops here. Or we could drop down, run the sell stops, and go all the way up for the buy stops that are resting just above all these highs in here. Remember, we have a big old vacuum of liquidity in here. Huge open void. And again, they don't have to come all the way up to close that in on the daily. They just got to come up there just half of it, and it'd be enough. So the scenarios would be, if we trade up to 29.55, I think that would be a sell for the sell stops for 29.10. So that'd be what, 45 pips or 40 pips or so with spread. And then we are in the order block, bullish order block here. Yeah, I'd rather see that. I'd rather see it trade up here than go down for the sell stops. And then it could make a run higher if it wanted to. Notice how everything else is balanced out really nice. I have a smaller little fair value gap in here, but it's got a brick wall in my opinion with this one. So if it trades up there and goes lower, I don't think they'll come back for this one after it repels 29.55, goes below the low here. So it's been a sell-off since midnight to last night. So they're going to want to reach up into get some kind of a premium in this. And it's logical that with this old low here, could see it 29.55. Take a quick look over here at Euro. So far, giving up a little bit of the ground. Dollar. And cable's a mess. It's going to struggle while it's inside this candle's range here on the daily. It needs to escape it. If it goes below it, great. That gives us the focus on 28.65, 28.60 as a potential buy. And if we lose the ground there, we really are hoping to get it down to this level, because I will be buying that. I'm going to put you guys on mute just for a second. My youngest wants to come in and ask me something, so I don't know what he's going to ask, so I have to make sure this is muted. I'll still be here looking at it with you. Well, that was innocent enough. They have a place downtown. It's called Sweet Frog. They have frozen yogurt. He was asking if he can go there this afternoon. So I guess that's where I'll be going. Not that I eat that stuff. I like real ice cream. So the question I got was, how do you frame a premium? Come on. We have swing high in here to our low. Okay, we have equilibrium right there. And anything above equilibrium is what? Premium. It doesn't have to line up with Fibonacci. It's better that it does, because this is one more confluence, but anything above equilibrium is a premium. Anything below it is a discount. The key is anything below equilibrium is a discount, then you have to find a discount array when institutional order flow is suggesting higher prices. When price is above equilibrium, it's at a premium. Just because it's at a premium doesn't mean it's at a point at which you trade. You have to find a premium array to couple it with when institutional order flow is bearish. So it's a simple little process, but you have to frame it in terms of, are we in premium or discount? By itself, it means nothing. You have to have the discount or premium array in alignment as well. So you're blending two things. An actual reference point institutionally, which some say don't exist. Then you have the also basic terms of, are we overbought or oversold? That's what it does. If you look inside of a predetermined range of price, you don't need indicators to determine if you're overbought or oversold because of equilibrium. If it's expanded higher above equilibrium or halfway point, it's overbought. It can remain overbought and keep going overbought for a while until it gets to some reference point where institutions and large orders will be slamming the market to do something at that level while it's overbought, not because of the indicator, but because of valuation and where institutions have already stepped in before. So does that help you with, I forgot who was asking. It went by pretty quick. Let's see if I can. Sebastian, did that answer your question? You're welcome. The August PDF files, will they be printer friendly? I guess friendlier than the monthly PDFs. I'm going to have like graffiti, neon, black, and all kinds of like abstract art behind it. And you'll have to use those like little red filters to lay it over top of it. That way you can see what it says. Oh man, I'm going to be thinking about that one the rest of the session. I'm going to be goofing off now. Honestly, I don't know how I'm going to present it because obviously my notes are in just white background, simple Word document format. But I don't want to do that because it's so easy for folks to simply just put that, out there and make books out of it. And that was the whole point of why the slides are so heavily done with black, and the whole thing is full black, because if you're going to print them out, obviously it's going to be very costly for you to do it if you're trying to sell it. Not that that would be a deterrent, because I'm sure you could probably put a price tag on it, someone would still pay for it. But it was meant as a deterrent. So far, the dollar CAD hasn't really moved that much. And cable's still in a slop. I'm on mute. I'm just watching price with you. So far, we're still stuck in a little tiny little range. You would expect, with such large impactful news expected during the 8:30 release, a lot more volatility, and we're not seeing that. Not a good technical week at all. But Michael, the euro went up. Why is it not good? Because it didn't give me a level I want to trade off of. Yeah, I got a lot of people have asked several times throughout this whole mentorship if I could pay for the whole thing up front, and I don't do that, Mark. It has to be delivered on a month-by-month basis. That way you can tell me you did get what you paid for and you want to continue. If I just do it as a lump purchase, it creates a billing nightmare, and it's hard for me to combat abuse. And that was the reason why I didn't do that. It would have been so much easier for me to do it. Great, yeah, we're done. But and a lot of folks couldn't afford it either, so. Yeah, I believe you're right, Mike. 10 o'clock news and crude oil inventory later on, maybe the impact on dollar CAD. I like to run on the sell stops. Just have this in your notes today. I think we'll run 129.10s, maybe 129 big figure. Euro. Yeah, Euro's not moving much at all yet. Yeah, let me just frame out dollar CAD and we'll be done with it. We have sell stops below 29.10, 29 big figure. Could spike down to, let's see here, hold on 1 second. Oh, I hear you, Bailey. It's, yeah. All right, we have ADR on, and that puts us at 129.10 as well. So we'll see a drawdown to 29.10, maybe 29 big figure. Let's use this. Grab it down here. I'm not holding you, girl. Yo, see, she is such a baby. Like, she wants to be held all the time. She wants to be cuddling all the time, which is great, but obviously this is not the time to be doing it. But hang on here, 29 big figure. So we could see 29 big figure, 29.10. So do we get up into, say, 29.50, which is basically the halfway point in here? So midpoint of that, 29.50 could be a sell to get to 29.10, 29 big figure. Okay, so there's a scenario I like. It could go up to 29.55 also. On wild news around crude oil inventories, it could come all the way up here and fill in this gap as well, this tiny little thing here that starts or ends with the resistance at 29.63. So 29.63 could be the highest end. Your stop would have to be above the rejection block here on the close, which would be 29.80. So 30 pips to make, what is that, 40. So it's a little bit better than 1-to-1. I think that is a scenario that may unfold today. So we'll see. It doesn't have to go up there. It could just roll right on lower. I'm only thinking that's likely to happen because we've started right from the midnight candle, right, just went lower. So we're also in a bullish order block, so they may want to push it up there, get into a premium. Again, 29 mid-figure, like that. 29.55 is even better, but it could just go right up here in the middle of the gap and not even close it. So you could do 129.50 as a sell and take profits at 29. 29.12 would be good. 29.10 is good. 29.05 I think is the richest you should go, because with 29 big figure, that would give us about the 5 pip spread, and they may not want to allow the spread to give you a solid exit if you get too too demanding on your limits. So that's going to be it for this morning. I'm going to let this one unfold. I think we'll see the drive down here. Again, the conditions are not ripe. We have really sloppy market conditions, but I do want to give you something you can work with today. So now I'm going to get an email for some of you. You've only shown us one setup in the last 19 days. So that's what we're looking for today, okay? I will give you folks a recap, normal time, all that business. And I've seen your question regarding the COT, Rob, so I'll include that today in the recap if you don't mind. Awesome. All right, folks, take care. Be careful. Don't do anything stupid. But if it gets up here, do a demo on that. Do a demo, put a stop loss here, and get some kind of a limit off below here. And we'll see what you get. And I'll come back with you guys later on this afternoon and see what transpires.